when I first started Blueprint years ago, one of my first clients was a general contractor, and they hired us to. They had big growth plans, and they hired us to be their CFO and work with them on their accounting side with one of our controllers. And so when we first started working with them, what we found was their financial statements were way out of date. They were about 6 months behind in their financial statements. So it's June and they didn't have December done yet. And so January, February, March, April, they had no idea how they did. But the way they were managing or monitoring how the company was performing was the owner would come in every morning and log into his bank account and see how much cash he had. Okay, well, my point to that was that's great. You had some cash in the bank, but how do you know how that cash got there? Is if you have 100 grand in the bank, is that good or bad? I have no idea, because there's a lot of dynamics going on in your business that are bringing that cash to it at the balance that it's at. And some of those dynamics are collecting your accounts receivable on time, or paying your vendors on time, or you know, having people come to work every day and not do anything and still get paid, or people spending money way beyond any budget that would ever be considered for spending for that particular item or service. So there's just all kinds of things going on in a business as it grows. In the beginning, when it's small, yes, the owner can have a pretty good handle on everything that's going on. Our company has grown, it's been in business for 5 years now, and we're coming up on our 6th year anniversary. But there's things going on in our business, and it's really not even that big, that if I don't have monthly financials on time, I wouldn't even know if I'm making money or not. But anyway, this contractor had gone out and asked for a loan from their bank, which was a large national bank, very large. So you can think Wells Fargo, Chase, Bank of America, Citibank. Those are the big boys. And that the way they tried to get the loan was go to the branch where they did their deposits and ask the branch manager to give them a loan. So that is not the way to get a loan from a large company, a large bank. There are people within the bank looking to make commercial loans, but they're not sitting in a branch. But the branch manager is obviously going to try to help because you're asking them to help, but they're not really the right person to go to. And a good CFO would know that, and would be a good resource to the business owner to help them think about how they're going to best go forward to get a loan. The second part that we found in the accounting was they were doing cash basis accounting. And so many companies do cash basis accounting because they file their taxes on a cash basis, and their accountants want to keep it simple. So they just want to do cash basis accounting. Well, cash basis accounting is pretty much worthless when it comes to looking at whether your company is making money or losing money, because you're not accruing the opposite of cash basis is accrual basis, where you're making sure that all of your expenses for June are in June, and all of your expenses for July are in July, and all of your expenses for May are in May, so that when you look at each one of those months individually by accruing payroll, if you pay payroll in May that really was for April, you need to take that out of May and put it back in April. And you do that by accruing the payroll at the end of April on your books. And so it's that if you're not doing that, then you're not matching up revenues and expenses appropriately. And that's really one of the key parts of accounting, is making sure that you're matching up revenues and expenses properly. If you have payroll that is paid in a different month and the labor was incurred in another month, you need to make sure you move that payroll back or forward into the month that it was used to generate a product or a service. And so anyway, we converted the company to the accrual basis of accounting, and we put together a plan for the next year, which showed them going from 10 million in sales to 20 million in sales, because of the different contracts that they had in process that they were pretty sure they were going to sign. And we went to the bank that we knew was going to be looking favorably about doing a loan to a contractor. And a lot of banks don't like to do loans to contractors. So we knew which bank to go to, because we've been in the business of getting loans for people. And so lo and behold, we got the loan, the $5 million line of credit approved. The company was able to have enough financing in order to uh, facilitate the growth that they had planned. And they were able to achieve 20 million of sales in that second year. So we went from 10 million to 12 million to 20 million. And we were able to not be worried too much about cash because we had enough financing to be able to pull that off. And without great accounting and a good relationship with a banker that a good financial consultant will bring to a company, the company probably would never have been able to move forward and grow like they did. And today, the company's grown to be a $50 million contractor and very well renowned and known for its financial strength, financial stability, because we have a budget, we have a plan, and the plan is around making sure we retain enough retained earnings in the company so that in a rainy day, the company will not be struggling, and making sure that when we say that we're going to make X amount of money for a quarter, we're pretty dead on because we know how to forecast properly. And again, that's something banks really love to know. If you're going to have a bad quarter, make sure you tell them ahead of time, because they don't like surprises, and you shouldn't like surprises as a business owner either. So getting a loan is one of our case studies that we see. A lot of times our clients, when we get involved, they don't have enough capital to achieve their business plan. And so either they're going to have to get investors or get financing. And the best way to go is to get financing, because then you're not giving up any equity in your company, and you still take complete control of your business.